This episode is sponsored by Arculus and Bullish. Stay tuned for more information on both of them later in this episode.
Let's go.
What's up, everybody? I'm Scott Melker, and this is the Wolf of Wall Street's podcast, where 2 times every week I talk to your favorite personalities from the worlds of Bitcoin, finance, trading, music, art, sports, politics, basically anyone with a good story to tell. Now, with any financial market that's nascent and starts small, eventually you start to get more sophisticated products for investors to focus on. And one of the most important products in any market is futures, which were added by the CME famously in 2017. And those products have evolved over time. Well, today's guest is the Director of Equity and Cryptocurrency Products at the CME Group. And so she probably has more insight into what's happening in the derivatives and future market than arguably anybody else on the planet. So I'm really excited to talk about that with her, how institutional money moves in the crypto market and what they have coming potentially in the future. Payal, thank you so much for joining me on the show today.
Oh, absolutely delighted. Thanks for having me.
So listen, for people who don't understand, as I touched on, these markets sort of evolve over time and you get more sophisticated products. Why are futures important? Why did you start to offer this product in the first place?
Yeah, sure. So maybe a good place to start might be CME's kind of history or journey into the crypto space. So our journey started into crypto back in 2015, 2016. And in 2016, we initially launched the Bitcoin reference rate. And that was in direct response to customer needs to start getting into Bitcoin and crypto. And back then, the price on all the different spot exchanges was hugely varied. So you had all these frictions, KYC, AML, the kimchi premium out in the Far East. And so there wasn't a central price of Bitcoin. There wasn't a point that we could, as a financial marketplace, we could point to and say, this is the price of Bitcoin. So back in 2016, we launched the Bitcoin reference rate. We then launched our standard size Bitcoin futures contract, and that has a 5 contract multiplier, so 5 times Bitcoin. Back in 2017. And then fast forward, things got a little bit more quicker in terms of our development. We launched a Ether reference rate and then Ether futures. And 2021 was absolutely phenomenal for us. We launched 4 crypto products. We launched standard Ether contracts, and then also the micro size contracts. So really, for us, what was important is a mechanism to give our clients access to cash settled derivatives on a regulated exchange. And really that was important for 3 reasons. Firstly, there was ease of access. So by trading on the CME, you don't need a wallet, you don't need to understand exactly how the crypto spot platforms work. You're not necessarily open to hacking, or you don't need insurance. And you're protected a little bit from some of those outages or flash crashes or auto liquidations that happen so often on the spot exchanges. And so by being a cash settled contract, it just plugs and plays into the same way that every other futures contract does. So really, it's no different to trading the S&P or a gold contract, and it's settled in US dollars. And by having that financially settled contract, you mentioned earlier, it takes away some of those strains of the network. And therefore people can, especially institutionals, can take that first step into crypto because, as I say, they don't need to handle the underlying, they don't need to know the intricacies of the network. And so, the biggest reason is ease of access. The other reason that we started with futures and a cash settled future was the fact that counterparty risk is mitigated. So we as the exchange, we are the buyer to every seller and the seller to every buyer. And so trading on a regulated marketplace where the rules of the road are very clear, they're very transparent, they're tried and tested. So again, for an institutional getting into crypto, they know the rules of the road. They've been trading all of these other futures products with us for so many years that this is just applying those same rails of the road to crypto and kind of making it a little bit easier. And I guess finally, you know, the key thing for us in terms of launching these crypto products is that they were all based on an index. So the same index that I spoke to earlier, that although they're futures contracts that settle on the last Friday of every contract month, they actually settle to that index. So again, it takes away, by having an index, you're taking away some of the nuances or the dependency on any one index. So, you know, we're chuffed with how well the recent launches have gone. Absolutely delighted with the product offering and how, you know, we were able to expand that. But really, it was in direct response to our clients' needs to access a regulated market for cryptocurrencies.
And what role do futures in general play in price discovery, in making a market more efficient? Just in general, how do futures sort of help improve a market?
Yeah, so, you know, as the name suggests, a futures contract is a contract between two counterparties where they agree the price, to the price now for a future date and time. And so what we're trying to do is, you know, CME has a 180-year-old history, right? We started as a butter and eggs exchange way back when. We were the first to create corn futures, financial FX futures, equity futures. So we were trying to put all the lessons that we learned on all of those products onto, you know, this new asset class that is crypto. And, you know, some of those benefits start coming through. So, you know, having that regulated marketplace, for us to be the seller to every buyer and vice versa, removing that counterparty risk, you know, having the checks and balances in place that you don't suffer from auto liquidations if the market moves against you. You know, we have some price halts in place. We have all of these kind of tried and tested approaches that will help the ecosystem and will help bring access of crypto, Bitcoin and Ether to both institutionals and the active trader.
So you touched on the fact that when you launched it, I believe it was in December of 2017, Bitcoin was around $20,000 and it was a minimum 5 contracts. So you had to be trading with $100,000. And as a retail person, you actually would have had to access it, I believe, through a broker, right? You couldn't have done it yourself. So this was primarily, at least initially, I presume, a institutional product for people with access to relatively large, large capital. So you eventually, I believe, started to offer other products like the Bitcoin mini futures. Is that why you added microfutures? Is that why you added them, to give access to people with a bit less capital?
100%. Yeah. So again, it was in direct response to our clients' needs, and even the institutional needs as well. You know, as you say, the price of Bitcoin rallied from when we launched the contract. In December 2017, it was 20,000. It reached a high of $65,000. And that contract just became too large. With a 5 times multiplier for Bitcoin and a 50 times multiplier for Ether, those contracts just became a little bit too large, both for the institutional client and for the active trader. So really the idea behind the micro contract, which is sized at a 0.1 multiplier. So a tiny, tiny contract. You take Ether, right? Trading at what, $2,000, $3,000 today? At 0.1 multiplier, we're talking about a $300 contract. So the micros offer 3 things, in my opinion. You know, they offer choice. If you can access the larger one, and for roll costs and things like that, if you need access to the bigger one, great. But there's now a choice. You have the larger standard contracts, you have the micro contracts. They offer flexibility and they offer precision. And that's what we're finding, that with the institutions, they might be coming and trading both the standard size and the micro just to get that precision that they need in terms of their hedging. But also it opens up to active traders, to the retail traders through their FCM to access a regulated product with all of those benefits that I mentioned. But now, you know, you don't only have to go to your spot exchange to trade crypto. You could actually come to the CME for Bitcoin and Ether.
And often when you go to your spot exchange, as you touched on earlier, it goes offline during times of volatility. It's not there when you need it. You don't even have the ability to buy and sell sometimes when price is moving rapidly. And that obviously never happens on the CME, which is a huge benefit that you touched on. You probably then have a lot of insight as to how the big players are moving their money or who they are, because these contracts generally were so large. So who are the primary customers? What kind of customer are you seeing trading these contracts on the CME?
Yeah, I mean, from the institutional side, there has been a real upwelling of interest that's come from banks, from asset managers, and from other firms that you've seen from recent announcements. All the corporates that are starting to use Bitcoin as part of their corporate strategy. And I think the main thing for me, what I've really noticed from 2017 to now, is how that conversation has changed. Back in 2017, the conversations were more around, what is Bitcoin? What is Ether? What is crypto? Is it right for me? Is it right for my investors? How do I get access? Like, should I be getting access? And that, over the pandemic, over 2021, and certainly into 22, that has changed 180 degrees. That conversation is now, how do I get access? How can I get crypto into my portfolio? And I think as people have become more comfortable with the returns that Bitcoin generates, some of those uncorrelated risks that it adds, the conversation definitely has evolved. We're seeing that with the involvement of the introduction of new contracts, the ETF in the US, that is a futures-based contract. Again, access to more participants, to more users of crypto. So, on one side, that conversation has definitely changed. On the other side, what we're seeing is the personas or the personalities, in our Bitcoin and Ether market can be. You can draw parallels to the conventional equity market, right? So if we look at the miner, is he akin to the commercial grower, right? Does he need to hedge something? Yeah, are there personalities that have digital spot positions that maybe don't want to liquidate them in the event of a price fall? They may be trading futures. Do you have people that want to monetize their portfolio? They may be using futures. It's certainly easier to short with futures than trying to locate the physical, right? So, just taking that example of the miner, for example, right? That with Bitcoin, we have a term structure. So the way that our contracts are created is that we have 6 monthly contracts and then 2 Decembers. So right now we're trading all the way out to December 2023. And so for a miner, that's incredibly useful, right? He can use that term structure to figure out how much he should be mining now, how much they should be investing in CapEx or buying new servers or things like that. And they can lock in some of those informed decisions into their business right now. And that's not dissimilar to what we see in energy or gas. So, what we're seeing is, a new asset class that's forming, a new crypto players that are coming to the market that we didn't necessarily see, very, crypto native. Then we've got the banks and the institutions that have started to look at crypto assets, and the conversations there have really changed. But the personas are starting to resonate with traditional personas that we see in other markets. So it's a real melting pot. And I think because of that melting pot, we have, price discovery, price transparency in our markets. And, if the futures are the center of that price discovery for Bitcoin and Ether.
Right. And I want to talk a little bit more about the miners hedging, because that's such an interesting topic. How would they actually do that? What would be the process? I mean, I think we all understand that miners are generally bullish on Bitcoin, right? They're the ones who are actually mining it. They might want to avoid having to sell it. Like you said, there might be factors that have to do with their investment in it, but how would they actually use this contract to protect themselves?
Sure. So all of our contracts, Bitcoin, Ether, and all of the other asset classes that we offer futures contracts on, are all accessed through an FCM or a broker. So the miner would need to get in touch with the broker. They would be able to set the miner up. And the way that the future works is that they would be a margin requirement. So it's not fully funded in the same way that the spot crypto is. So if you're buying Bitcoin on one of the spot exchanges, you would have to put down the full value of your trade. With futures, it's slightly different. You're just required to put that initial margin down and then pay your variation margin on a day-to-day basis. So the process is incredibly simple. It's all that burden is almost taken away from the miner and onto the broker or the FCM that manages that relationship. So CME do not have any direct client relationships. Everything is managed through that central broker, and that acts in a different way. That we touched on liquidations earlier. In the event of a liquidation, or in the event of a big down run in the markets, it is the responsibility of the broker or the FCM to reach out and maintain that account. So they would make some margin calls, and therefore overnight, you're not being liquidated, right? You can go on a Friday evening, you can rest easy that your crypto is right. Your Bitcoin or Ether is doing all right.
Yeah. That makes sense. So with the miner, effectively, they're looking to short as a hedge against their long position. Is it a cash and carry trade? Is it just a straight up hedge? What are they looking to do there generally?
Yeah, I mean, it's a number of things, right? It's both of those things that you mentioned.
Okay. Yeah. Because I mean, the cash and carry trade when futures were launched became so popular. Obviously, buy spot, short the future as they come together. It's basically free yield. And I think people maybe don't understand, but that's how a lot of the platforms that are offering yield in crypto have been doing it for years. And that didn't exist before you guys launched your contracts in 2017. Really. I mean, it was something that people couldn't do. And it's very interesting. So you mentioned that you guys have contracts priced out to December of 2023. What are those contracts trading at now?
So the Bitcoin contracts, as I mentioned, actually for all, the one key thing that we wanted to do for the crypto suite is to make it as simplistic as possible to understand. So for standard Bitcoin, standard Ether, micro Bitcoin and Ether, all of those contracts have a structure where we have 6 monthly contracts. So you could buy the January contract is up for maturity tomorrow. So they settle on the last Friday of every contract month, but we have 6 monthly contracts plus the 2 Decembers. So yeah, right now for the entire suite, you can trade all the way out to December 23. And there are some margin offsets. So if you are long a Bitcoin contract and short an Ether contract, you could be able to net off the margin. So really encouraging trading in that entire suite.
You obviously talked about the fact that you have Bitcoin and Ethereum contracts. Have you seen interest in any other cryptocurrencies, or those things you would consider adding?
Yeah, so I mean, there's so much interest from DeFi, from Web3. Our clients are constantly looking at the space, as are we. So right now, we don't have any plans for anything aside Bitcoin and Ether. That's keeping us incredibly busy. But it is something that we continue to monitor the space and we look to. But yeah, no plans to do anything else right now.
So you said it's keeping you incredibly busy. How big is this market for you? I guess in a vacuum, but also relative to your other markets.
Sure. I mean, so for Bitcoin, the growth has been phenomenal. When we launched that contract back in 2017, we were doing about 1,000 contracts a day. Fast forward to now, we're doing 10,000 contracts a day. In the micro space, we're doing 30,000 contracts, and this week alone, in the micro Ether contract, we were doing 50,000, 60,000 contracts. So it's a sizable market that we're seeing. And the other key metric that we monitor a lot for is large open interest holder, which is interesting, right? From an institutional perspective, a large open interest holder is any holder that holds in excess of 25 contracts. So that they're holding a sizable chunk. And as we see that report growing, that's a report that comes out from the CFTC, we're continuously seeing that large open interest holder. We're seeing, for Bitcoin, in excess of 100 large holders. So that's 100 different firms holding that level of investment in Bitcoin futures contracts. And that's, that's growth in the Bitcoin market, the Ether market, that we've been incredibly surprised and happy with, the growth in 4 years. And to see, 30,000 contracts on the micro being traded, that's a big number by any account. So yeah, incredibly happy with how it's going.
That's a huge number and leads to the obvious next question, which is, have you seen an increase or decrease in one versus the other? Has Ethereum, been catching up to Bitcoin at all? Does that kind of wane and there's different times where one is more in demand? What is that interplay like?
Yeah, so I mean, for Ether, there's been so much interest, in DeFi, layer 2, stable coins. Most of those are based on the Ethereum network. And when you look at that backdrop, we've definitely seen a shift from Bitcoin into Ether. I guess what I would say is that Bitcoin, being the original, it's the one that most of our counterparties, most of our institutions, that it's Bitcoin that they take the first step with, and then a shift into Ether, and then the interplay between the two. So having that ecosystem with the 4 different contracts, Bitcoin options also, there is a nice interplay, but certainly a lot of interest in Ethereum of late, from November 2021 into 22. And that is just set to increase. So really excited to see growth there.
Guys, I'm so excited to tell you about this new crypto cold storage solution called Arculus. Their cold storage technology keeps your crypto keys off the internet and on an Arculus key card. With no cables and no USB connections, it insulates you from the thousands of hacking attempts that happen online every single day. You can store, swap, and send your crypto all with a simple tap of your Arculus key card. And if someone were to get a hold of your card, it doesn't even matter because they have 3-factor authentication, ensuring that the only person with access to your crypto is you. Guys, you can check out Arculus at thewolfofallstreets.link/Arculus. That's ARCULUS, and they're offering $40 off if you use promo code Arculus40. Secure your assets, secure your future with Arculus. Have you ever been trading crypto and during bouts of high volatility had your exchange go completely offline, or seen the order books go thin and have absolutely no liquidity for your trade? I know that you have. It's happened to every single crypto trader, but it's not an issue anymore thanks to Bullish. Bullish is a powerful new exchange for digital assets that offers deep liquidity, automated market making, and industry-leading security. Combining the innovations of DeFi with the regulated environment of traditional finance, Bullish empowers users to trade with confidence across variable market conditions while secure in a regulated environment that's backed by multi-billion-dollar liquidity contributions from the Bullish treasury. Follow @Bullish on Twitter or visit thewolfofallstreets.link/Bullish to learn more. Not investment advice. Digital assets and cryptocurrencies are high-risk products. Consult your professional advisor before dealing in them. Bullish's services are available in select locations only and not to U.S. persons. Visit thewolfofallstreets.link/Bullish for important information and risk warnings. Yeah, I mean, anecdotally, it feels like over the last year, interest in Ethereum, both from individuals and institutions, has increased. So it's interesting to see that, I guess, in the data as well, especially, as you said, sort of accelerating at the end of last year. I know you're not speaking directly with your clients, but as this volume has sort of increased and the interest has increased, do you have any feel for whether these institutions that are looking for exposure are looking for it as a trade? Are they buying into the digital gold narrative? Are they looking at it as a hedge? What's the narrative that's driving their interest?
Yeah, I mean, in terms of investment strategies, there's obviously a difference between Bitcoin and Ethereum, and it's really important to understand the characteristics between those two. And as you say, Bitcoin was designed to act as a secure peer-to-peer decentralized payment system, security obviously being Bitcoin's first priority, followed by speed. And Ethereum, slightly different, more of a payment system, more decentralized, operates smart contracts. So we believe that they can that they can coexist. And that's certainly something that we've been hearing from our clients. What's interesting is the overarching interest in blockchain technology, whether that's Bitcoin, Ether, all the other cryptos that are out there, the layer twos. And when we look at some of the stories in the media, about corporations accepting Bitcoin as payment, some of those DeFi projects currently in the works, there is a real need to manage some of those assets and liabilities on the balance sheet. And we can't ignore the growing interest from banks, from asset managers, and that's certainly coming through. So I think what is most exciting for me is that acceleration of how and the curiosity of why now, right? And all of those projects coming online, and how we can be there to help manage clients' needs for risk management and for price discovery. So in terms of the strategy, they're varied, and it's a real melting pot. But being there to be able to offer that price transparency, I think is right where we want to be.
Yeah, I think that there was a feeling sort of in the run up over the end of last year that a Bitcoin spot ETF was going to be sort of this holy grail of products for institutional involvement, for the sort of the big wall of money, endowments, pensions, people who are looking. We didn't get it, right? We got a Bitcoin futures ETF. What has been sort of the relationship between your futures contract and the Bitcoin futures ETF? Do you think that people are looking to gain exposure through one or the other, both? Do you think people are using that product? It was very popular initially, but seems to have waned quite a bit since.
Yeah, I think it was a cautious first step from the regulator.
I agree.
And in terms of our pipeline and the way that we created that Bitcoin reference rate all the way back in 2016, it was something that was always on our roadmap. And so, creating that index in a way that we could settle futures contracts, it could be used to settle futures, ETFs, other funds. That was part of the reason of creating that reference rate. So, as I say, I think it's a cautious first step from the regulator. I think it allows access, again, in a tried and tested way, right? An asset manager can simply add a Bitcoin ETF onto their list of funds in a very easy way, that they can focus on what they're good at and their speciality, and just it takes away some of the complexities, right? Rather than having a Bitcoin listing, which could have its own complexities, this is just adding to that. So I think it's it's a great first step, and obviously there are differences between a futures-based and a spot-based ETF in terms of what you're actually holding in your basket, right? And then there's the roll costs that one has to take into account. There is an optimal liquidity window. But I think in terms of institutions getting into the space, financial advisors being able to offer this out, and getting comfortable with the idea of another way to access crypto, I think it's great from what we've seen so far from the regulators.
Right. I mean, when ProShares launched, there was, multiple billions of dollars in interest in the first weeks. And of course, Valkyrie followed very quickly with their launch. And it was reported actually that there weren't even enough futures contracts for them to purchase to put into the ETF. And they had to actually start looking out to future months, which of course, then it's much harder to track the rate of the underlying spot price. But were those futures contracts being purchased from the CME to place into the ETF? Is that how that works?
Yeah, so being a futures-based ETF, the fund manager, will buy CME futures. The way the ETF is structured is that it doesn't necessarily have to be front-month contracts. So one of the things that we did once that ETF got off the ground is that we, or in anticipation of, was to change our front-month position limits. So they were increased from 2,000 to 4,000 back in October. And they actually have a step down. So the last 3 days prior to expiration, they step back down to 2,000. And that's really, to manage that roll process. So what we're seeing is ETFs and other funds holding the front, second, third month, and it's creating a nice term structure. It's adding to the liquidity, it's adding to the back months, and making a better price point for the futures complex.
Perfect. And I think I agree with you that regulators were trying to sort of throw the industry a bone and test the waters before they went all in, obviously, on a spot ETF, which I still think personally could be very far down the road. I don't think that's something that we're going to see very soon for those who are optimistic about it. I would love to be proven wrong. It's sort of how I feel. Speaking of the regulators and the SEC who allowed this product, there's been a lot of talk about what is or isn't a security, which cryptocurrencies people will be allowed to trade, how innovators will be able to operate in the United States. If the SEC were to take the hardest line position and deem effectively everything not named Bitcoin a security, maybe Ethereum is safe, how would that affect what you're doing at the CME and what you offer?
Yeah, I mean, just going back to that spot ETF, for a second. I think it's a test of time, right? It will come at some point, hopefully. But there are so many challenges to deal with. We talked about flash crashes on any one exchange. How would an ETF deal with, a mark to market when in that last minute when they're assessing their portfolio, the resultant mark to market is several 100,000 points lower. So it's things like that I think the regulator took a very cautious step. That having that futures based contract removes that vulnerability to one price or one exchange. CME, as you mentioned, is less likely to outages. We have the circuit breakers, so it's a first step. And I think as regulation evolves, we will see more innovation in the space. And from CME's perspective, we think regulation is a feature, not a bug. But that it's robust, fair regulation that doesn't stifle innovation, competition, or growth. It should be measured. And in our experience, there are a lot of market participants, particularly on the institutional side, that are looking for cryptocurrency exposure, but they want that time-tested, regulated financial instruments as their first step to gain exposure. So really, as that regulation clears itself or there's more clarity, I think there's a lot more innovation that will come. Whether that is concentric from futures in terms of innovation in other products. So whether that's more ETFs and funds and structured products, I think that will be really exciting to see. And for us, the involvement of more products, when that becomes fair and reasonable for our clients, and we can create a robust underlying index. But really, it comes down to the regulation. We need to know where to send the paperwork, whether it's a CFTC regulated instrument, whether it's SEC. We need to know where to send that regulation. So, time will tell.
It feels like those answers are coming sooner than later at this point. I mean, even Biden is issuing an executive order, presumably next month, to start to straighten out which regulators are going to handle what. But that's got to be like watching the Super Bowl for you guys, trying to figure out what's going to happen when you're trying to operate in this environment. I mean, everyone knows that markets hate uncertainty, sort of the old meme, but I think that people just want clarity, right? I'm assuming institutions just want clarity. Even if it's kind of what they would view as negative, they would probably just like to know what they can do as opposed to be operating completely in the gray. In my opinion, that's probably been a huge barrier to a lot of the money, like you said, that wants to get in being unable to.
Right. And I think, looking forward into 2022, I think it's one of the key things that remain in focus, right? Regulation. It's what the Fed and what's happening with the inflation and the dollar, government spending, all of those things coming together and shaping institutionals' views of how much they invest into crypto into 2022. And I think, regulation is certainly a part of that.
Being that the CME is so trusted and well-regulated, well-operated, would launching a retail-focused spot exchange be something that would ever be considered? We talk about these flash crashes and all these things that happen on the other exchanges. If it was in the framework of the CME and was offered by you guys, is that something that would be interesting?
It's not really something that I would comment on, but what it's CME, as we talked about, has a long history of innovation, right? We are a futures and options exchange, and so where we can offer products that suit our clients' needs within that framework. And it's a framework that is tried and tested, right? We have these checks and balances in place. So where we can offer product within those guardrails, within that environment, I think that's definitely our go-to.
It makes me think of the movie Dumb and Dumber. So you're saying there's a chance, the 1 in a million talk. No, but and what's interesting is, we talk about, it's got to be a very challenging market because there's so many different exchanges. And as you said, there's these arbitrage opportunities and a difference in price across spot all across the world. And that still exists even with futures. Don't we also see different futures prices based across different exchanges?
Right. Yeah. So I mean, the spot there's KYC and AML frictions in the spot market, and then you have the futures market that again is broken into regulated and unregulated. And I think there is competition, but there is plenty to go around. And I think what's interesting is that the regulated and unregulated futures offerings are very different offerings, but they mean different things to different people, right? So, to BitMEX's credit, for example, they were the first to pioneer the perpetual swap offering. And it was largely done in a way to avoid some of that regulatory scrutiny, to get to market, to allow access to crypto that maybe wasn't on a spot exchange. Where we're a heavily regulated US-based futures market, there are certain things that we can and cannot do. So fundamentally, our offering is different, but that appeals to a different customer base. And one of the great things that we see are that there are certain businesses, certain crypto nascent firms, hedge funds that can trade the CME product, they can trade the non-regulated futures, they can trade spot, and they can take advantage of all the ARB opportunities. And that's great for price discovery. It's great for risk transfer. So, there's more than enough to go around in this space.
The perpetual swap is such an interesting product, and it's obviously sort of native to crypto, but a lot of people sort of see that as the reason that the market still has so much volatility, is because obviously if you can get 100x leverage and someone can literally see what the open interest is and whether longs are paying shorts and in what amount, you can very easily long or short squeeze. So do you think that those are products that eventually probably need to either be regulated or that they just need to become a smaller part of the market for that sort of insane roller coaster to end?
Yeah, I think over the past 4 years or so, we've seen that volatility reducing a little bit. So volatility is still certainly there in the market, but the ability to use futures to manage that risk, the ability to go short, the ability, to risk transfer. So I think that volatility, where we were seeing huge swings overnight, it's still there, but I think that volatility has reduced a little. And I think education around volatility and product characteristics, between the regulated and unregulated space needs to continue. And I think that's what is really important to investors, having those resources to understand market moves and how that affects your portfolio.
Moving on, do you guys see DeFi as something interesting to incorporate into your products, or do you in any way see DeFi products as competition to what you're building?
No, I think it's additive. The entire industry, from a DeFi perspective, we're seeing more the establishment of more companies that are doing lending, borrowings, the emergence of SEC lending, prime brokerage services, all of that coming out of DeFi, I think is additive. Those companies have a need to risk manage. They're using futures in some instances. So I think it's additive. Where we have to kind of define our role is how we can be a part of that and how we can add solutions. So, it's something that we're continuously monitoring and seeing where we can add value.
That makes perfect sense. So after this conversation, how can somebody who wants to trade on the CME gain access? Who do they call? How do they participate in this market?
Yeah, so great question. A lot of detail is on our website. So cmegroup.com/cryptocurrencies or Bitcoin or Ether. There's a contact us page there. But the easiest way would be to go to their broker. See if their broker offers Bitcoin futures. The micro, as I mentioned, is a great way to gain access. It's a small size product. It's a 0.1 multiplier, so it's a really small, easy way to get into the futures product. So see if they offer that, and yeah, if you want to get in touch, they can definitely reach out through all of our contact us pages.
And where can our listeners follow you after this?
Yeah, I'm on Twitter, I'm on Instagram, I'm on all the social medias. So yeah, they can hit me up at Payal SL.
Awesome. Well, thank you so much for taking the time. I think you clarified so many questions that people have about how the CME actually works, how futures contracts do. Even for me, and I've dug pretty deep into it, it gave me quite a bit of insight. So thank you for that.
No, my pleasure. And yeah, really excited to see where this market goes. I think 2020
you and me both.
2022 is going to be great.